Hello and welcome to Live the African Dream podcast. I'm your host, Eunice Ajim, and today we have Olu Oyinsan. He is the managing partner at We Capital, an early stage venture capital fund investing in promising technology companies in frontier markets, especially sub Saharan Africa. Before launching We Capital, he was the vice president of investment at Ingressive Capital. Today, Olu sits on the board of many companies in which We Capital has invested in, and they are proud to have been the first believer in notable startups across Africa. Olu, it is such a pleasure to have you today.
Thank you very much, Eunice. I'm excited to speak with you today, too.
Awesome, awesome. So let's just dig right in. Let's talk a little bit
Mhm.
about your story and how you got where you are today.
Uh, Clearly, that's not something we can cover in totally on this time. First of all, we probably don't have the time resources. Neither do I have the emotional resources to dig in. But I'll give you a summary,
Okay.
right? Um, Contrary to what my friends think, I think I wasn't born with as much privilege as it seems to be. I was born of course, I was born in Lagos. I was born in Nigeria, but I wasn't born in Lagos. I was born in Akure, Ondo State, where my dad worked in between um, Lagos and Akure at the time. Um, and I wasn't the sharpest kid in school, contrary to what my colleagues did.
I don't think a lot of us are, so that's good.
Right? Um, but just fast forward, I did my first degree in Lagos in business and accounting at Redeemers University. I was actually the first set, so the Guinea Pig set. And from there, by whiskers, I got into Guarantee First Bank. And I think this was 2009 or 2010, right? So tomorrow, I still don't know how I passed the aptitude test because it was a straight, just academically at the time.
Yeah.
And I had done my NYSC at the company, and I was loved. So who knows? There's probably an untold story there. So I was doing commercial banking for about 3 to 4 years with Guarantee Trust, and what really struck out to me at the time was that I got a lot of energy from doing, right? Being in the field, structuring transactions, helping people achieve their goals, having very unique insights into some transactions that people have been doing the old way for a long time. Then I realized that as someone who wasn't particularly enthused by math, finance might actually be something that was in my future,
Okay.
right? And then I did that in end of 2013, 2014. I moved to the US to get my MBA at Health Business School, specialized in finance and strategy. After that, I went on to work stints at Forrester Consulting, which is technology consulting, and later on, early stage practice of Silicon Valley Bank. But what was very interesting just around my career was the fact that every time I worked in either corporate America or corporate Nigeria, I realized that just having a very creative mindset towards looking at transactions could bring you a lot more value than just going by the book. And if you know, venture capital is the one place where it's the wild, wild west. You can be right as long as you have conviction. There's no right and no wrong. And it gives you a place to really step outside the mold and create value. And so, right from when I made the move to Silicon Valley Bank, I knew I wanted to be a VC. Because when you're in banking, the upside is capped, right? You do a brilliant transaction, 15% per annum. You do a stupid transaction, 15% per annum. And I said, I want to be able to get 90% per annum because I was brilliant, right? And I want to get nothing if I didn't do it well.
Yeah.
And VC is the place where, even though the feedback loop is long, if you have both the guts and financial intelligence to structure transactions, you will get the reward. And so I knew I wanted to do VC at the time. And usually from SVB, the next thing is to you usually start a fund or join a fund. And that was the time when I decided, you know what, I'm going to move back home and I'm going to either start or join a fund. I ended up joining a fund. But the important thing at that time was just that the Africa opportunity was starting to become real. I felt there weren't a lot of people that were better positioned than me to take advantage of that opportunity because I knew both business environments very well. And so, short story of how I got into VC. But I would say my DNA had always been to be not just in finance, because truthfully, early stage VC is only 30% finance.
Yeah.
Right. You only use your back knowledge of finance to make things happen. But it's not really finance heavy anymore, like PE or investment banking. But I always knew that I wanted to merge that entrepreneurial urge within me and merge it with training in finance and all those things to really just create value where it wasn't obvious what the answer was. Do you get what I mean?
Yeah, definitely. No, that makes sense. So now you're like, hey, I think VC is the way to go. And you decide, okay, I'll either join or I'll start mine. And you ended up joining. Eventually you decide, okay, like I've been at the firm, I want to go ahead and I want to launch mine. Just talk us through the process of, going ahead and launching We Capital. Like, what was the backstory and how did you come from, hey, I want to be in VC, I'm joining a fund, and like, oh, I'm going ahead and I'm starting my own.
So the thing is, just that like everything else in life, it's all about objectives.
Yeah.
Right? Company objectives, firm objectives, personal objectives, right? And what usually brings people together is an alignment of objectives, right? If you and I get together and say, oh, let's go join Amazon, of course we wanted, at this point in time, we want to plug into the objective that Amazon has to say, whatever it is, right? You might be achieving the same objectives running a mom and pop shop, right? But you decide, oh, I want to go to Amazon. And so the objective had always remained the same. But at the time, it was actually a great opportunity to, move back home, be able to be involved in a lot of the transactions that were going on at the time. And so it really went from the place where it was great alignment for my personal objectives. But at some point I thought I could have even better alignment for my personal objectives, launching a fund with certain things that I felt were in my DNA. Right?
Yeah.
And so it's just usually a story of both. Right? People join consulting firms, go out, start a consulting firm. My former company, Guarantee Trust Bank, the guys who started Access Bank were inside Guarantee Trust Bank. One day they decided that we wanted to do this a little differently, and they put together Access Bank, and both are doing great, right? And so that was really it. I thought that there were some things I wanted to express differently, right? That it would be unfair to try to express on someone else's dime, right? And so, they always say you have to put your money on your soul where your mouth is, and that was why We Capital came.
Awesome. So We Capital, from what I've heard, is yes in French, and I think I'm originally from the French side of Cameroon. So when I saw we, I was like, oh yeah, that is definitely we. But I think it's one of the things that a lot of people I saw a meme on Twitter how your team was like, is it we? So what inspired the name behind We Capital?
So this is it's a name with a lot of that carries a lot of weight and meaning for us.
Yeah.
So I did start We Capital with the earliest person who joined me to build it, Francesco. All right, he's a venture partner, but he's actually a co-founder.
Okay.
Sometimes the shoulder to cry on is just very important. You're like, dude, I want to do this thing. Let's do it together. It's like, yeah, I have many concerns, but I agree with you. Um, and so we were classmates in business school,
Nice.
and this was our second business together. We had tried to start a company called Wi-Fi Monkey in the US that allowed people who lived in close proximities to each other to share their Wi-Fi signal and get paid on that. Right. We got a season to say from Comcast. The rest is history. But we had a lot of difficulty raising money at the time. Right. I was an immigrant from Nigeria. He was an immigrant from Switzerland, a senior immigrant, but still an immigrant. And of course, he's French speaking.
Okay.
And so at the time, I said, we should name it Yes Capital, right? That a lot of the entrepreneurs who have had the kind of experience with knows that we've had, right? Let's change the narrative. And he was like, yeah. Or we. I thought we actually sounds good, right? We said, you know what? Which is something a lot of founders, I think, should emulate, is doing SEO testing before you name anything, right? Because you need to figure out how far this can go.
Yeah.
Even just in our space, you see a lot of companies start once they hit 1 million in ARR. Now it's name. It exists in Ghana or it exists in Mexico, and it's
Yeah.
like bigger than your dream, right? So you never want to be bigger than your dream. And so we did a bit of SEO, and we realized that we would take us farther. It would take us wherever we wanted to go. And it was a lot more inclusive, right?
Both the
Because
French
yes,
and English.
we're in West Africa, and in Anglophone Africa, people in Francophone Africa actually resonate with the name a lot more. And so that was how we came about it. But I would say it was Francesco's influence, French-speaking influence.
Awesome, awesome. Well, that's really good to hear the backstory. I think many firms you never hear like what really inspired the name behind your firm. So that was an interesting one. So on the good side of things, you guys recently had an announcement about doing the first close of the second fund of We Capital. Congrats, right? It's a big accomplishment. As a fund manager myself, I know it is a very difficult game in the back end. I think when everybody sees that, and I'm like, yes, Olu, great job, congrats. But for some of us that know exactly what the back office looks like, we know it is an interesting journey. Let me just say that. So,
I was trying to cry.
So again, just tell us a little bit about like your recent accomplishment, your new phone, like like what was that process like for you, and what are your hopes and dreams for this new phone?
So what I would say is, first of all, you're going to be successful as a fund manager the moment you refuse to have options, right? And it's funny because that's one of the things that comes to my head each time I see someone new starting to, talking about a fund. I'm like, yeah, it's easy to talk, right? You need to name it, it's easy to build a website, easy to syndicate some deals here and there. The question is, do you have options, right? If you've decided that I have no option, because you know that raising a fund is almost, or building a VC fund, it's almost binary. It's either you cross that hurdle or you don't, right? And in that space of crossing that hurdle, it's crowded. You see a lot of names. This VC, that VC, one check here, one check there. But to institutionalize as a fund, you have to get an AUM that makes the business sustainable. And this is usually the hurdle. And it's so tough that, and this is when I'm talking about it, for someone of African descent, or you're African, or you're black, or you're not the regular profile who's leaving A16Z after 20 years, right? It's a bucket of imposter syndrome. Do you have enough self-belief? Do you have enough skill? Are you introspective enough to either even decide this is not going to work, right? And so it's that bucket of all these emotions: fear, anxiety, self-doubt. But as I said, if you really decide that you have no choice, you decide that you have no choice. Because a lot of people, if you're skilled enough to start a VC fund, you have options. But if you decide that you have no choice, it's going to be the most rewarding thing you can do for yourself. And first things are that you have to approach it with the no going back. No going back attitude. A lot of people, as you know, you speak to LPs and it's like, let's keep talking. The next talk can be in a year. The question is, are you still going to be doing this in a year? The next talk can be in 2 years. There are LPs in our second fund that I did speak to in 2019 before we launched our first. 2019, 2020, 2021, 2022. Right? And so it's almost like it's a rolling stone. So first day, but the important thing is that it gets easier, right? Because a lot of the work you did when you were trying to break through is going to pay off in your second and your third, right? And so you have to approach it like you have no options. So it was just tactically, it was a very rewarding but very tasking journey, right? I traveled all over the world on a budget, sleeping in weird places, on my friends' couches. When I did the announcement, I actually thanked all my friends whose couches I slept on. San Francisco, Hong Kong, Mexico, New York, weird places, right? To raise money. Some were successful, some weren't. Some were successful at the time, some became successful 3 years after, right? And so it was really a tasking journey. You have to be figuring out a lot of things at the same time. First of all, you need to be struggling to raise money. But while you're struggling to raise money, you need to act like you're sure you're going to raise money, right? This is the thing, right? You need to behave like you're sure that you're going to raise that fund. Because if you raise the fund and you haven't been doing all the other things on the side, it would be difficult to execute, and you actually might never raise that fund. So it's the chicken and the egg, but you have to give birth to both of them at the same time. And so did that, was able to raise about 4.1 million for the first fund over about 2 years. But also, I feel like I had a head start because I had understood the fundraising mechanics and dynamics while I was with my old fund, right? So I felt like I had raised 2 funds, right? That fund eventually closed, and sometimes the longer you're at something, you realize things you were doing wrong. You can take learnings, things you should waste your time on, things you should waste your time on, and so it was a whirlwind. But the most important thing is that you have to be introspective. Am I the kind of person that would look in the eye and give money that can be lost? Right? This is a stronger question than do I want to be in VC? And this is what leads a lot of people into just emotional trauma and all those kind of things, because you're trying to break through something that might not really be for you. because BC is a combination of three big skills: finance, consulting, and sales. The higher you go, you become a salesperson, right? If it's not in your natural DNA or it's not a skill you can develop to be a salesperson, you might be a good investor, but raising a fund probably not for you, right? Because yeah, all the deal dynamics, all those things are great, but a lot of times you have to sit in a room and talk someone off their money, and that's why it's good to be introspective. If not, you can do like I did before, partner with someone to raise a fund that has complementary skills, right? I knew that I had the full bouquet of skills, even though there's some I liked more than the others, right? I would have preferred just to sit behind my desk and do this. But I just from my background, I knew that I had the full bouquet of skills, but it was still very tasking for me. So if you have those skills, then you have to go out, find a niche, find a good story, and build your network, right? But also be very receptive. And this is why I feel some people are raising money for 5 years, 6 years unsuccessfully. I would probably take a second look and see, am I doing this wrong? Should I do something else and then maybe come back? Or should I go and join a fund and be able to align my mission with someone else and make impact? And so, yeah, just picking some of the most important things or things that stand out to me about the journey.
Wow.
Um,
I don't
but
even I
yeah,
don't even think you realize some of the gems you have dropped in this podcast right now. And I think the right listener, like if they really pay attention to what you said, can get so much value. Because I mean, it is a constant thing in my inbox. So people are like, "Hey, Unisa, you recently launched a fund. I want to launch my own VC fund too." And like a lot of things. And I'm just like, yeah, like but like that back end, like just being a VC is one thing, but also like really understanding like what it takes, right? To be able to like get to that next level. um
mhm.
I'll let the listeners figure it out for themselves, but yeah.
Scaring people.
And I think my next question, that follow up was, like, yes, now you've raised, like, what are you looking to accomplish? Like, what are some of the, I mean, either like from a portfolio company perspective, from an impact perspective, like, what are your goals for this second fund?
So there are two things, and I'll break them down. Two parts of being a success, building a successful VC fund. There's one about being a great investor, right? And there's one about being a great fund manager, right? They're two different things. And you have to either be good at both or create a team that can do both well. Being a great investor is going to get you into good deals. You're going to good deals. You're going to set yourself up to make money, make impact for yourself, for your LPs, for your team, right? And also be able to back brilliant entrepreneurs. Being a fund manager is the boring part. Because the very important part is actually building a company. Because if you're a first time fund manager, you're an entrepreneur, right? You're actually an entrepreneur. You're building a fund, you're building a company. And so that's the back end. So you don't end up being a briefcase VC, which is fine too, but that's almost an angel investor because you now need to build an institution that can outlive you, right? You need to build a culture that would hold when you're not there, right? You need to build processes that will continue to deliver the kind of returns that you would have delivered in your briefcase. And so, from the investor standpoint, we want to keep backing people, entrepreneurs in Africa who might probably not have raised money if people like us didn't exist. There's a lot of bias, there's a lot of pattern matching, pattern recognition that is global on what a successful entrepreneur will look like. That's different in Africa, and you need Africans who understand the landscape to back those people. And that's kind of our DNA. We're not interested in celebrity deals. We're not interested. We don't pick deals from pages of newspapers or magazines or tech. We don't do that. We look for raw entrepreneurs who can build for themselves, for their team, for customers. And so we're going to keep doing that. We're going to be able to put more conviction behind those people. We're going to be able to lead those deals when a lot of investors are afraid. Right? We're going to be able to lead those deals when we have conviction. And that's why I'm glad we have a bigger fund that can do more of the same that we've done for the first fund. Also, we're going to diversify our portfolio a little more. We're building a Pan-African fund, right? And we're not just building for Africa, we're building for the world, right? We're not, oh, this is an African investor. We are an investor that's in Africa, that invests mostly in Africa, but competitive, structured, just as good as any investor anywhere in the world. And so we are going to keep backing those kind of entrepreneurs. We're going to keep bringing out the kind of returns that we need to be competitive on the global landscape for LP money. And we're going to be funding Africans for Africa, right? And when we do that, half of our mission is, our objective will fail. So that's on the investor side. On the fund management side, we're building a fund that's going to survive me, survive my co-founder, survive the partners, survive the senior guys in the fund today, where we can lay a foundation for how ventures should be done and where venture funds from around the world can actually learn from us. To see this is how you build a thesis, a geography-specific venture fund that would last generations. And so on that end, buffering up our team, looking for people who have our DNA, our fearless DNA of backing founders, not minding who else is doing it, right? Not asking who else is investing, right? Just backing the conviction because we have a compass in our hands to know where this is going and what we want to achieve and what the founder wants to achieve. And so we're building that on the back end, solid structures, making sure compliance is good, making sure investor relations is good, making sure we're building a team of really competent people who would say what they mean and do what they've said, are honest, will support founders, are really interested in being investors, not just looking for a job.
Yeah.
Right? And so that's what we're also building on the back end, right? I'm hoping we can improve our processes to keep delivering the kind of returns that we already have.
Wow. Okay, so that was so beautifully made and said. And I truly hope the listeners are going to get so much value, even though this was such a short podcast. Olu, I always like to end with this. What is your personal African dream as an African, right? Like, what kind of legacy? And I know you mentioned a little bit when you were talking about what you hope to see for for We Capital. So what are your hopes as a person for where you want to see yourself and the continent of Africa?
So really, just as someone who's had the chance to be around the world and see the way Africa is perceived, I think my Africa dream is more of just removing that Africa standard. Today, there seems to be some Africa standard, right? That, for Africa, it's good enough. No, we want to build institutions, we want to build companies. But my seat in Africa was just as efficient, just as global, just as creative as anywhere else in the world. And that's why we're not trying to be leaders in Africa, we're trying to be world leaders in Africa. Right? And that's why, even from the company side, we always encourage them. Yes, you're taking African market, now go to the US and take some market. Go elsewhere and take some market, right? We want, my dream is where African companies are serving the world, just the way Amazon is sitting in Seattle and serving them, right? Where we have that interchange of trade where Africa doesn't have an Africa standard. We're just excelling in the world. We're global, right? That really is where it is. It takes a lot of work because we have to raise the standard of everything we do, keep it high, keep it there. But there are a lot of brilliant people in Africa, and my dream really is that we reach just as well as the rest of the world, and we can just compete on the global stage.
Awesome, awesome. Well, Olu, it was such a pleasure having you on the podcast today. I really enjoyed the conversation, and I hope we'll have you maybe right in the next couple of months so that we can bring out a little bit more content just from your experience as an investor on the continent, as an operator. Thank you again, and I hope everybody have a good rest of your day.
Thank you so much, Eunice. Have a good day.